Passive income has become a bit of a buzzword in the finance and investing space. It is a fact that majority of millionaires do not strictly rely on one source of funds, but have several sources of income. Passive income can be a great way to help you generate extra cash flow, whether you're running a side hustle or just trying to get a little extra dough each month. Especially as inflation rages through the economy, passive income can help you more during the good times and tide you over if you suddenly become unemployed. If you voluntarily take time away from work, or if inflation keeps chipping away at your purchasing power, with passive income, you can have money coming in even as you pursue your primary job, or if you are able to build up a solid stream of passive income, you might want to kick back a little. Either way, a passive income helps you create extra security. And if you're worried about being able to save enough for your earnings to meet your retirement goals, building wealth through passive income is a strategy that may appeal to you. Passive income is money that goes into your bank account without you having to do much or any active work. Residual streams of income can be a great way to accumulate wealth, particularly if your earning potential is stunted at your day job. But most popular passive income streams, such as rental income, usually require a lot of money upfront to get started. Fortunately, it's also possible to engineer a passive income stream from scratch. If you know you want extra money in a hands-off way, you can reverse engineer a side hustle or a small business idea accordingly to ensure that it pays you while you sleep. What is passive income? Passive income includes regular earnings from a source other than employer or contractor. The Internal Revenue Service, the IRS, says passive income can come in two sources: rental property or businesses in which does not actively participate, such as being paid book through royalties or stock dividends. Many people think that passive income is about getting something for nothing. It has a great get-rich-quick appeal, but in the end it still involves work. You just have to give the work up front. In practice, you may do some or all the work up front, but passive income often involves some additional labor along the way too. You may have to keep your product updated or your rental property well maintained in order to keep the passive dollars flowing. But if you're committed to the strategy, it can be a great way of generating income, and you'll create some extra financial security for yourself along the way. Passive income is not your job. Generally, passive income is not an income that comes from something that you've been materially involved in, such as wages you earn from a job. Passive income is not a second job. Getting a second job isn't going to qualify as passive income streams because you still need to show up and do the work to get paid. Passive income is about creating consistent streams of income without you having to do a lot of work to get it. Passive income is not non-income producing assets. Investing can be a great way of generating passive income, but only if the assets you own pay dividends or interest. Non-dividend paying stocks or assets, like cryptocurrencies, may be exciting, but you won't earn any passive income. Here are some passive income ideas to consider in 2023. These are 15 passive income ideas to build wealth. If you're thinking about creating passive income streams, check out these 15 strategies and learn what it takes to be successful with them, whilst also understanding the risks associated with each idea. Number 1. Dividend stocks. Shareholders in companies with dividend yielding stocks receive regular payments and intervals from the company. Companies pay cash dividends on a quarterly basis out of their profits, and all you need to do is own the stock. Dividends are paid per share of the stock, so the more shares you own, the higher your payout. The opportunity is, since the income from the stocks isn't related to any activity other than the initial financial investment, owning dividend yielding stocks can be one of the most passive forms of making money. The money will simply be deposited into your brokerage account. The risks is the tricky part of choosing the right stocks. For example, companies issuing very high dividends may not be able to sustain it. People warn that too many novices jumps in the market without thoroughly investigating the companies issuing the stocks. You've got to investigate each company's website and be comfortable with their financial statements. You should spend 2 or 3 weeks investigating each company. That said, there are ways to invest in dividend yielding stocks without spending a huge amount of time evaluating companies. Going with exchange traded funds, or ETFs, are investment traded funds that hold assets such as stocks, commodities, and bonds, but they trade like stocks. ETFs also diversify your holdings, so if one company cuts its payout, it doesn't affect the ETF's price or dividend as much. Another key risk is that stocks or ETFs can move down significantly in shorter periods of times, especially during times of uncertainty. As in 2020, when the coronavirus crisis shocked the financial markets, economic stress can cause some companies to cut their dividends entirely, while diversified funds may feel less of a pinch. Option 2. Create a course. One popular strategy for passive income is creating an audio or video course, then kicking back whilst cash rolls in from your sales of your product. Courses can be distributed and sold through sites such as Skillshare. Alternatively, you might consider a freemium model, building up the following with free content and then charging for more detailed information. Or for those who want to know more, for example, language teachers and stock picking advice may use this model. The free content acts as a demonstration of your expertise and may attract those looking to go to the next level. The opportunity is a course can deliver an excellent income stream because you make money easily after the initial outlay of time. A risk is that it takes a massive amount of effort to create the product. And to make good money from it, it has to be great. You want to build it on a strong platform and market your product and plan for more than one product if you want to be successful. Number 3. Write an ebook. Writing an ebook can be a great opportunity to take advantage of the low cost of publishing and even leverage the worldwide distribution of Amazon to get your book seen by potentially millions of would-be buyers. Ebooks can be relatively short, perhaps 30 to 50 pages, and can be relatively cheap to create since they rely on your own expertise. You'll need to be an expert on a specific topic, but the topic could be niche and use special skills or abilities that few offer, but that many readers need. You can quickly design the book on an online platform and even test market with different titles and price points. But just like with designing a course, a lot of your value comes from what you add with ebooks to the mix, drawing in more customers to your content. The opportunity is an ebook can function not only deliver good information and value to readers, but it's also a great way to drive traffic to your other offerings, including audio or video courses or other ebooks, a website, and potentially higher value seminars. A risk is your ebook has to be very strong to build up the following, and that it helps if you have some way to market it to such an existing website, a promotion on other relevant websites, appearances in the media or podcasts, or something else. So you could put in a lot of work up front and get very little back for your efforts, especially at first. And while an ebook is nice, it will help if you write more and then even build a business around the book, or make the book just one part of your business that strengthens the other parts. So your biggest risk is probably that you will waste your time with little reward. Fourth is rental income. Investing in rental properties is an effective way to earn passive income, but it often requires more work than people expect. If you don't take the time to learn how to make a profitable venture, you could lose your investment and then some. The opportunity is to earn passive income from rental properties. It's good to determine 3 things: how much return you want on the investment, the property's total costs and expenses, the financial risks of owning the property. For example, if your goal is to earn $10,000 a year in rental cash flow and the property has a monthly mortgage of $2,000 and costs another $300 a month for taxes and other expenses, you'll have to charge $3,133 in monthly rent to reach your goal. In terms of risks, there are a few to consider. Is there a market for your property? What if you get a tenant who pays late or damages the property? What if you're unable to rent out your property? Any of these factors could put a big dent in your passive income. And an economic downturn can pose challenges too. You may suddenly have tenants who can no longer pay their rent, while you may still have a mortgage of your own to pay. Or you may not be able to rent the home out for as much as you could before, as income declines and home prices have been rising quickly due in part to relatively low mortgage rates, so your rent may not be able to cover your expenses. You want to weigh these risks and have a plan in place to protect yourself. Fifth is create a blog or a YouTube channel. Are you an expert on travel to Thailand, a maven of Minecraft, a sultan of swing dancing? Take your passions for a subject and turn it into a blog or a YouTube channel. Using ads or sponsors to generate your income, find a popular subject or even a small niche and become an expert on it. At first you'll have to build out a suite of content and draw an audience, but it can create a steady income stream over time as you become more known for your engaging content. The opportunity is that you can leverage a free or very low cost platform, then use your great content to build a following. The more unique your voice or area of interest, the better for you to become the person to follow, then draw sponsors to you. The risks is that you'll have to build out content at the start and create an ongoing content, which can take time, and you'll need to really be passionate about your product, since that can help you maintain the motivation to continue, especially at the start as your followers are still finding you. The real downside here is that you can outlay a bunch of your time and resources with little to show to it. If there's limited interest in your subject of niche, your area of expertise may be too niche to really draw a profitable audience, but you won't be sure of that until you experiment. Number 6. Rent out useful household items. Start even smaller with other household items that people may need, but that they may be collecting dust in your garage. Lawnmowers, power tools, mechanical tools in a toolbox, tents or a large cooler. Look for high value items that people need for a short period of time where it might not make sense for them to own the item. Then put together a way for clients to discover your inventory and a way for them to pay for it. The opportunity is that you can start small here and then scale up if there's an interest in a particular area. Do people suddenly want a tent for the weekend camping when the weather gets warmer or cooler? Figure out what the demand is, and then you can even go buy the item rather than having it on hand. In some cases, you may be able to recoup the value of the item in just a few uses. The risk is that there is always a possibility that your property is damaged or stolen, but you can mitigate this risk with contracts that allow you to replace the item at the client's expense. If you start small here, you're not exposed to much risk, especially if you already have the item and you're not likely to need it in the near future. Pay particular attention to liability issues, especially if you're renting out equipment that has potential to be dangerous, such as power tools. Number 7. Affiliate marketing. With affiliate marketing, website owners, social media influencers, or blog promote a third-party product by including a link to the product on their site or social media account. Amazon may be the best known affiliate partner, but eBay and ShareASale are among the other larger names. And Instagram and TikTok have become huge platforms for those looking to grow a following and promote products. You could also consider growing an email list to draw attention to your blog or otherwise direct people to a product or service that they may want. The opportunity is when a visitor clicks on the link and makes a purchase from the third-party affiliate, the site owner earns a commission. The commission might range from 3 to 7%, so it will likely take significant traffic for your site to generate such serious income. But if you can grow your following, or have a more lucrative niche such as software, financial services, or fitness, you may be able to make some serious coin. Affiliate marketing is considered passive because in theory, you can earn money just by adding a link to your site and social media account. In reality, you won't earn anything if you cannot attract readers to your site to click on the link and buy something. The risk is that you are just starting out. You'll have to take time to create content and build traffic. It can take significant time to build a following, so you have to find the right formula for attracting the audience. A process itself may take a while. Worse, once you've spent all that energy, your audience may opt to flee to the next popular influencer, trend, or social media platform. Number 8. Self-photography online. Selling photography online might not be the most obvious place to set up a passive business, but it could allow you to scale your efforts, especially if you can sell the name of photos over and over again. To do that, you might work with an organization such as Getty Images, Shutterstock, or Almany. To get started, you'll have to be approved by these platforms and then license your photos to use whenever someone downloads them. The platform that pays you every single time someone uses your photo. You'll need photos that appeal to a specific audience or that represent a certain scene, and you'll need to tease out where the demand is. Photos could be shot with models, landscapes, creative scenarios, and more. Or they capture the real events that may be making the news. The opportunity is that part of the value of selling or licensing your photos to a platform is that you'll have the potential to scale your efforts, especially if you can provide pictures that will be in demand. That means you could potentially sell the same images hundreds of thousands of times or more. The risk is that you could add hundreds of photos to a platform such as Getty Images and not have any of them really generate meaningful sales. Only a few photos may drive all your revenue, so you have to keep adding photos as you search for that needle in the haystack. It may require substantial effort to go out and shoot photos, then process them, and keep up with the events that may ultimately drive to your revenue. The motivation can be hard to maintain. Every next photo might be the lottery ticket, but that isn't always the case. Number 9. Peer-to-peer lending. A peer-to-peer loan is a personal loan made between you and the borrower, facilitated through a third-party intermediary such as Prosper or Lending Club. Other players include Funding Circle, which targets businesses and has higher borrowing limits, and Payoff, which targets better credit risks. The opportunity is as a lender, you can earn income via interest payments made on the loans, but because the loan is unsecure, you could end up with nothing in the event of a default. To cut the risk, you may need two things. You may need to diversify your lending portfolio by investing in smaller amounts of multiple loans. At Prosper.com and Lending Club, the minimum investment per loan is $25. Analyze historical data on the prospective borrowers to make informed picks. The risk is that it takes time to master the metrics of P2P lending, and it's not entirely passive, and you won't be able to carefully vet your prospect borrowers. Since you're investing in multiple loans, you must pay close attention to payments received whenever you make interest, if you want to build an income. Economic recessions can also make high-yielding personal loans more likely candidate for default, too, so these loans may go bad at higher than historical rates when the economy worsens. 10. Create an app. Creating an app could be a way to make the upfront investment of time and then reap the rewards over a long haul. Your app may be a game, or one that helps mobile users perform hard-to-do functions. Once your app is public, users download it, and you can generate income. The opportunity is an app has huge upside. If you can design something that catches the fancy of your audience, you'll have to consider how to best generate sales from your app. For example, you might run in-app ads, or otherwise users have to pay nominal fees for downloading your app. If your app gains popularity, or you receive feedback, you'll likely need to add incremental features to keep the app relevant and popular. The risk is that the biggest risk here is probably that you'll waste time unprofitably. If you commit little or no time to the project, or money you would have spent anyway for your market, for example on hardware, you'll have little financial downside here. However, if it's a crowded market and your truly successful app must offer compelling value or experience to a user. You'll also want to make sure that your app collects any data that is in compliance with privacy laws, which differ across the globe. The popularity of apps can be short-lived too, meaning that your cash flow could dry up a lot faster than you expect. Number 11. Rent out your parking space. Do you have a parking space that you're not using or that can be used by someone else? You could trade that spot for some cash. It could be an even better setup if you have a larger area that could fit several cars or that would be useful for multiple events or venues. The opportunity is in particularly high demand areas or during high demand times, for example during a concert or sporting event, your parking spot could be worth real money. For example, if you live near a place that has frequent commuters but that is strapped with parking spots, you may be able to have a money maker on your hands. You may have the best chance of turning a profit by renting to someone who needs a spot on a daily basis rather than a one-off event. The risk is that the idea may not particularly be risky, but you do want to make sure that you aren't violating any restrictions from your place of residence or any entity by renting out a parking space. It's probably worthwhile having a disclaimer of liability as a condition of your parking spot too. Number 12. REITs. A REIT is a real estate investment trust, which is a fancy name for a company that owns and manages real estate. REITs have a special legal structure so that they pay little to no corporate income tax as they pass along most of their income to shareholders. The opportunity is you can purchase a REIT on the stock market just like any other company or dividend stock. You'll earn whatever the REIT pays out in dividend, and the best REITs have a record of increasing their dividends on an annual basis, so you could have a growing stream of dividends over time. Like dividend stocks, individual REITs can be riskier than owning an ETF, which consists of dozens of REIT stocks. A fund provides immediate diversification and is usually a lot safer than buying individual stocks, and you'll get a nice payout. The risks, just like dividend stocks, you'll have to pick a good REIT. That means that you'll need to analyze each of the businesses that you might buy. This is a time-consuming process, and whilst it's a passive activity, you can lose money if you don't know what you're doing. Like any stock, the price can fluctuate a lot in the short term. REITs dividends are not protected from tough economic times either. If the REIT doesn't generate enough income, it will likely have to cut its dividend or eliminate it entirely, so your passive income may get hit when you want it the most. Number 13. Sponsored posts on social media. Do you have a strong following on social media, such as Instagram or TikTok? Get growing consumer brands to pay you to post their products or otherwise feature in your feed. You'll need to keep filling your profile with content that draws in your audience, though, and that means continuing to create posts to grow your reach and engagement in your followers on social media. The opportunity is leveraging your social media presence is an attractive business model. Drawing eyeballs and clicks to your profile with strong content and then monetizing that content by setting up sponsored posts from brands that appeal to your followers. The risk is getting started here can be a catch-22. You'll need an audience to get the meaningful sponsored posts, but you're not an attractive option until you get a meaningful audience. So you'll have to focus a lot on first growing your audience with no guarantee that you'll be successful. You can end up spending tons of time following the trends and building content in the hopes that you'll eventually get a sponsorship that you're aiming for. Even when you've got sponsored posts and you're looking for, you'll need to keep posting to draw attention and remain an attractive option for advertisers. That means committing to more time and monetary investment, even if you do have a lot of autonomy on exactly when to do it. Number 14. Invest in high-yield CD or savings accounts. Investing in a high-yield certificate of deposit CD or savings account on an online bank can allow you to generate passive income and also get the highest interest rates in the country. You won't have to leave your house to make money. The opportunity is that you can make the most of your CD. You'll want to do a quick search of the nation's top CD rates and the top savings accounts. It's usually much more advantageous to go with the online bank rather than your local bank because you'll be able to select top rates available in your country, and you'll still get the guaranteed return of principal up to $250,000 if your financial institution is backed by the FDIC. The risk is that as long as your bank is backed by the FDIC and within limits, your principal is safe. So investing in a CD or savings account is about as safe as a return as you can find, and that return can pale in comparison to inflation, hurting the real purchasing power of your money. Nevertheless, a CD or savings account will yield better than you holding on your money in cash or in a non-interest bearing checking account where you'll receive nothing. Last one, number 15, selling designs online. If you have a design skills, you may be able to turn them into money makers by selling items with your printed designs on them. Businesses such as Cafe Press and Zazzle allow you to sell items such as t-shirts, hats, mugs, and more with your own designs. The opportunity is that you can start your own design and see what the market's interested in and expand from there. You may be able to capitalize on surging interest in a current event and design a shirt that captures the spirit of the times, or at least a snarky take on it. You can also set up your own website storefront through sites such as Shopify to market your goodies. The risk is printing partners allow you to ship items without directly investing in the merchandise yourself, avoiding one of the biggest risks that you'll have to tie up your capital, but you may be able to get better pricing if you invest in some inventory yourself. Another risk here is that you could invest a lot of time with little payoff, but this avenue may be interesting if you're already doing design work for other purposes, such as personal interest. So, which passive income source is the best? The question of which passive income source is the best depends on several factors, but some of the most important include the amount of money you'll have invested, the total opportunity size, your interest and the ability in the area, the amount of time you'll need to invest and potential to succeed. Typically, the lower the barrier to entry, the more crowded the field of competitors, and the lower the likelihood of success. So you'll need to weigh the opportunity against these factors and see which passive income strategy works best for you. But it can be helpful to have natural ability and an interest in your target area, because these can help motivate you in the earlier days when things can be tough. There are passive income opportunities for people who are starting out with some money, and even those who have no money to start. So, how can I make money in passive income with no money? If you have little to no money to start, you'll have to rely mostly on your own time, investing power through you. At least you'll be able to build up a little bit of money. That means focusing on the passive income sources that take advantage of the following traits, such as an area where you're an expert. Here you can build expertise out to useful products or services for customers, such as design, software, or coding. An upfront work-heavy opportunity. You'll need an opportunity that requires time or work investment, such as creating a course or building out an influencer profile, to other options. In effect, you're substituting your time for your lack of capital until you get enough capital to expand your set of opportunities. Next, how can I make passive income with money? Money can provide you with more passive income investment opportunities. If you have money to invest in a passive income opportunity, you have not only the opportunities set above, but a new range. 2. Money is a prerequisite that taking advantage of the following passive income areas. Investing in dividend stocks or REITs. Investing in stocks means you'll need money up front, but you'll receive some of the most passive forms of income around. Save with bonds or CDs. Other purely passive activities include buying bonds or CDs. Here you can use your money to make money with little to no effort on your part. If that's what you'd like to do, of course you'll have to pay with your money, with lots of time invested to move into an even more lucrative niche too. So how many income streams should you have? There's no one size fits all advice when it comes to generating income streams. However, many sources of income you have depend on where you are financially and what your financial goals are in the future. But having at least a few is a good start. The last is passive income ideas for beginners. High yield savings accounts. A high yield savings account can be an easy way to generate extra boost on your savings beyond what you'd receive in a typical checking or savings account. It won't be much, but it's a simple way to get started with passive income. And then similarly with CDs and REITs. These are great ways of starting as a beginner. Hopefully this video has showcased a few different ways to create passive income for yourself in the upcoming year. Remember, passive income will require some initial work in the beginning. This is not just a free money scheme, so be prepared to do the work initially so you can reap the rewards for your future self. Leave your thoughts on passive income and what streams you use, or ones that I've missed. For more financial and investing content, subscribe to Business Ventures.